Markets, SEBI chairperson Madhabi Puri Buch cautioned retail investors against IPO frenzy. Speaking at an event in Mumbai today, she also said that 3 IPOs are under investigation for possible malpractices, including alleged inflation of subscription numbers. Admitting that IPO market is more of a market for traders than investors and that the price discovery mechanism is imperfect, the SEBI chief urged the investors to wait for the first quarterly earnings report of a newly listed company before investing in it. She also said that the regulator is looking into mule accounts and the practice of putting in faulty IPO applications to possibly inflate the subscription data. She did not mention if the issues under probe are main board IPOs or SME IPOs, but she did say that there are certain merchant bankers whose names are cropping up often in these cases.
The price discovery mechanism of IPOs is imperfect. And therefore, if a retail investor, not a trader, not the one who wants to flip on day 1 or day 7, because then you're a trader, you're taking the risk, you know the odds, upar bhi ja sakta hai, niche bhi ja sakta hai. If you're an investor, which means you want to hold for a reasonable period of time, then really speaking, why are you wanting to take this risk of upar bhi ja sakta hai, niche bhi ja sakta hai? Wait until the price stabilizes. Possibly wait until the first set of quarterly results come. There is no hurry and there is no impact cost for a retail investor. Now, institutions, if they want to wait and buy in the secondary market, there'll be huge impact costs. So I can understand an institutional investor wanting to come into an IPO, and they also have the wherewithal to independently assess the value. But for a retail investor, if you want to play the odds, come into the IPO market. Then if you win, good. If you lose, it's part of your gamble. But if you are an investor who believes in that company for the long term, then wait until price discovery is more efficient. You apply in a manner that your application gets rejected. So you put in hundreds and hundreds of crores of applications with multiple PANs, knowing full well that they will get rejected. So the whole purpose of applying is to inflate the number, knowing full well that it will get rejected. Right? So these are the kind of practices which we are observing, because we now have the data to be able to see such practices. And we're also seeing, I would say, that there is some pattern of which kind of merchant bankers tend to be, let us say, more frequent names occurring in such kind of malpractices. And therefore, we will be, in the interest of the investors, we will be required to both review policy as well as enforcement action on such areas.